I'm going to borrow a line from Sesame Street to describe our little company. And the line is, one of these things is not like the others. And it's my objective to prove to you through this brief presentation the unique attributes of Morien Resources Corp. So here's the key value drivers for the company. We have a royalty stream advantage, so no capital being put in. We have a good cash position, $2.3 million in the bank, and then we have milestone payments coming in the next 1 to 2 years, aggregating about $4.3 million. We have 2 top-tier royalty assets advancing towards production. One of them is the Donkin coal mine in Cape Breton, which is actively being equipped, and capital equipment is moving in today. We'll talk about that a bit more later. And the other one is a granite quarry on Tidewater in Nova Scotia known as Black Point. We have a team that is looking judiciously for other royalties to buy. We've bid on some things. They went for twice our price. We are not motivated to buy, but we do keep our oar in the water. We have 55 million shares outstanding, and different from almost every junior mining company in the Toronto Stock Exchange, our share count's going down. We have an active normal course issuer bid. We bought back our limit for last year. We renewed that program in January of this year, and we're going to try and do the same thing again this year. Here's a snapshot. So you can see the share price performance going back 2 years ago has gone from under 12 cents to over 25, so that's a double that we've seen. We were 85% up in the prior year. Our top shareholders are the Klein Group, and this is an important note. There's 2 Kleins in the coal mining business. One of them was a Toronto-based organization that took $300 million of shareholders' equity and blew it all away. They went into receivership. That's not our Klein. Our Klein is Chris Klein. He's a billionaire U.S. coal investor. He went into the Illinois Basin in the 90s. He bought coal when it was dirt cheap and made himself a billionaire for doing it. He's now liquidating out of the United States, and one of the places he's putting his money is in our project, and he also has another one in British Columbia. So he's migrating out from a late, tired coal market into a newer and fresher market. Management and directors own 9% of the company, and then we've got a few institutional investors for the balance. The rest of it is widely spread. The 2 project locations you can see are in Nova Scotia. Donkin Coal Project up in Cape Breton, which has been a coal mining area for hundreds of years. The name of Morien for this company is a local town that was originally settled by the French Huguenots in 17-something or other. Okay, here's the attributes for our project. The royalty is 2% of the first 2 million tons. That's a top-line royalty. And then 4% of what comes after. Top line is there's some transportation expenses and such that are deducted out of it, but it is top line. Located in Cape Breton. If you look to the right, you can see the Donkin Peninsula, call it. In the middle of that picture, you'll see some cleared land. That's the mine head. It's about a par 5 from Tidewater, which is all important in the coal mining business, low cost of logistics. Owner-operator is a Klein Group. Chris Klein, three of the 4 most productive coal mines in the United States. So we had $2 million on closing. We had 25% of this project, and so we went and flipped that for this 2%, 4% royalty, and some cash payments. So we got $2 million on closing, and then $2 million on the second anniversary, which is February 17th, or first coal production if that comes earlier, and then $1.5 million on the third anniversary, or if it comes earlier, first coal exports out of Canada. So we think this royalty is about $4 to $6 million a year. The mine is fully permitted at 2.75 million tons a year. The lifespan of the resource is 25 years. Near-term production, Klein is putting money in, as I mentioned, and we anticipate some coal will start to move later this year and sales will commence next year. The Power Corporation has 2 coal plants in the area. One of them in particular is well suited to this coal. It's a 20-mile truck ride from the coal mine to the Power Corporation. And one thing that Nova Scotia and the Power Corporation want to do is stop exporting dollars to import foreign coal. So 1/3 of that production from this mine could go to that local power plant, creates local jobs, release people the export of cash, a whole bunch of good things that come out of it. So a lot of momentum in the community to see this mine go ahead. The attribute to this project, which had everybody going, is there's 2 3.6 kilometer long access tunnels that are already in place. So this was a mine ready to go. These tunnels were built in the 80s. So it's the lowest quartile operating cost as well. Here's some pictures, and I won't bother going through all the notes, but you can see how much capital is being put at this thing. They've got continuous miners, they've got troop transport, safety housing for the troops, and so forth. So this is all running along ahead of the plan of the prior operator. This is our other project. It's called Black Point Aggregate Project. It's a production royalty. We don't disclose the amount, but we will tell you that the anticipated royalty is around in a wide range between $250,000 and $750,000. This is a 50-year asset. This is one beautiful piece of grade A granite that can be shipped down to the mid-Atlantic and all around through Florida by boats sitting right on tidewater. So that top picture that you're seeing there is the edge of the rock at the edge of the ocean. So the operator is Vulcan Materials Corporation. It's America's largest aggregates firm. They have about 320 operations in various parts. This is a key asset for a company like that to build out a 50-year plus granite quarry. It's a $90 million spend, more or less, and production will peak at around 7.5 million tons. This is a bit of an ebb and flow business in aggregates because it goes with the economy, but anticipated peak at 7 million tons a year. So we're currently now in the very last stage of permitting for this project. The community was polled going back about a year and a half ago about how much they wanted, and I think it was close to 90% of the community, over 90% of the community wants this project to go ahead. This is a poor part of Canada. One of the towns formed itself into the county because it couldn't pay its own freight. And so these jobs are highly sought after here, long-term, high-paying operator jobs. We think the permitting will be approved in the coming months, a couple of months from now, and then they'll start doing production work probably next year. Many people talk about their assets with great pride. For our little company, this is the slides that I have the most pride for. I'm going to go through 3 slides here, but this is what this team of people did. We spun this off from Erdene Resource Development Corp. We sold land holdings in Georgia for $395,000. We negotiated a coal offtake at this project to help make the sale from the prior owner to the Klein Group. We monetized this Black Point Aggregate project with Vulcan, as I mentioned, the largest, where we had spent $1.8 million. We got our cash back in milestone payments, and then we're going to have a 50-year production royalty. We helped the province, and we went out and found buyers for the coal project. In fact, the Klein folks were initially approached by us, not by somebody else. We had, for a brief time, a few $100,000 worth of a gold royalty on something called Banks Island. That was serendipity, but it's always nice to have a few $100,000 show up in your bank account. We facilitated the sale from Glencore into the Klein Group. We helped out on that. We then did a private placement for $1.45 million at 20 cents per share. Management was a big part of that private placement. Contrary to what you saw last year, there was no warrants attached to this. We did it almost flat to market. Cameron acquired the 75%. We went to Cameron when they did that and said we'd like to exchange our 25% for cash and the production royalties, which we did. And then we had Cameron put $1 million into us at 30 cents a share against a market price of 20 cents a share to put a little bit more cash in our kitty. We got a normal course issuer bid approved, and then the shareholders approved the transaction. We got a $2 million payment on closing of that. We've submitted last year the environmental impact statement, which is now wrapping up in the coming months. We put in a shareholder rights plan. We think that we may be taken over. It would be a natural for Klein to buy us out once the mine gets running. And then we did something a little clever. We consolidated our shares 1,000 for 1. We bought out all the fractional shares, and then we split them 1,000 for 1. And what that allowed us to do is reduce our G&A because we got rid of a bunch of shareholders that own 1, 2, 10, 20 shares. We bought them out at market pricing. So 327,000 shares came back to the company. And then through last year, we purchased and canceled 4.2 million Morien common shares, so 7% of the outstanding, at an average price of 22.5 cents per share. And back up one more slide. I often say, somewhat lightheartedly or tongue-in-cheek, if you put 3 zeros behind this record of things that we did, we'd be on the cover of Fortune magazine. We're a small company with a high focus on building shareholder returns, and that's what we hope to do, and we hope you'll join us with that. Thank you very much.